I'm going to talk about estate tax planning that, quite frankly, everyone should know, but especially high net worth individuals should know. First of all, it's important to understand the exemption. And what that means is that an inheritance under a certain amount isn't taxed once again by the government. This estate tax is a hefty 40%. So it's important to understand that this exists, understand its implications, and work with an estate planning attorney to see if this can be avoided. So right now, in 2025, the exemption is approximately $13.5 million for an individual. When you combine the exemption for a married couple, you're looking at approximately $27 million. This is set to sunset in the next year or so, which is really important to understand because the exemption is going to half. So what does this mean? So this means right now, if the estate is worth under $15 million, likely no action is needed to get around this. Because of the complexity of doing some things to get around the exemption, those burdens, those costs exceed the 40% tax that would likely be paid. Now, if you're looking at between 15 million and 40 million, then there are things we can do to lower the taxable estate, the amount that we want to get below the exemption, and we can do things like gifting. There's a lot of different gifting options, gifting portions of companies or gifting just cash outright. There's an exclusion for the amount of gifts you can give every year per individual. So 529 plans can be set up for grandchildren, other gifts can be made to just get money out of the estate. There also could be trust options that work here, whereby you could go ahead and get money out of your estate. You could use up some of your exemption, but put it into trust because you know that in the future, this exemption is going to decrease, and so it's better to go ahead and get it out now and use your exemption right now than not use the exemption and end up paying a lot in federal state gift taxes later, the death tax. And if your estate's over 40 million, absolutely you should be talking with an estate planning attorney and a tax professional right now to aggressively work on mitigating the tax. So I will note that one of the downsides of setting up a trust is that you give up control. And I'm not talking about a revocable trust. The revocable trust, you don't give up control, but you're not getting that money out of your estate with a revocable trust. You only get it out of your estate with an irrevocable trust. Now, when you put it in an irrevocable trust, income to that irrevocable trust is subject to a higher tax rate. Also, that money is no longer in your control. So whatever the trust document says for that irrevocable trust, you're stuck with it. So you have to live with it, and that's a key consideration to take place. That must take place, and also a really important reason why you need to consult with an estate planning attorney. So I hope you understand estate tax, the exemption, the taxable estate. This is just some preliminary information to understand what your potential tax burden is moving forward and what kind of arrangements you should be making to mitigate any death taxes.